Welcome back to the deep dive. Today we're looking at something pretty curious from the Colombo Stock Exchange.
Yeah, quite the paradox.
Exactly. So imagine this. August 4th, 2025. The ASPI, their main index, hits 20,000 points. Historic stuff, right? First time ever.
Huge milestone.
But then you look at the whole week, August 1st to 8th, and the summary just says flat. How does that work?
It's definitely a bit of a head scratcher. So our mission today is to dig into the sources, market reports, news bits, and really understand what was going on behind that headline.
Right. What were the dynamics? And crucially, what does it mean for, well, for you listening and for Sri Lanka's economy?
Let's unpack it. The week actually kicked off pretty strong. Friday, August 1st, the ASPI jumped 1.38%. Good turnover, too, over 7.3 billion LKR.
So a bullish start, then Monday, August 4th, that's when it happened. Sometime in the morning, boom, over 20,000.
A big psychological barrier broken. But this is key. It didn't stay there. The sources suggest it probably hit that peak, and then, well, people started taking profits.
Okay. So consolidation.
Exactly. By August 10th, the index was back around 19,826. So that initial surge fizzled out across the week, leading to that overall flat label.
But calling it flat feels, I don't know, a bit misleading when you zoom out, doesn't it? Because this isn't happening in a vacuum.
Not at all. You have to look at the bigger picture. Over the last 52 weeks, the ASPI is up an incredible 76.11%. 76%.
Wow. Okay, so with that context, a flat week looks different.
Completely different. It looks like a healthy pause. The market's just digesting those massive gains. It's not weakness, it's consolidation. And under the surface, things were definitely moving.
Right. You mentioned capital rotation. So money was shifting around between different types of companies.
Precisely. Big divergence between sectors. We saw some clear underperformers. Information technology, for instance, dropped about 4.0% that week.
Okay.
Energy was down 2.38%. Utilities fell 1.93%. Industrials lost 1.76%. Some reports mentioned rising global risks, maybe making investors a bit cautious about those more cyclical areas.
Makes sense. But where did the money go? What held up?
Well, that's the interesting part. Domestically focused sectors showed real resilience. Consumer staples, think essential goods, they were actually up 0.43%. Okay. Consumer discretionary, so non-essentials, gained 0.38%. Even real estate edged up slightly, about 0.065%. Investors were clearly favoring companies with, stable local earnings.
And that shift towards consumer stuff, that wasn't just random market noise, was it? It connects to the wider economy.
Oh, absolutely. It ties directly into Sri Lanka's improving macroeconomic picture. Get this, it's quite remarkable. In July 2025, Sri Lanka recorded negative inflation, minus 0.30%.
Negative inflation. So prices were actually falling, on average.
Yes, which naturally gives consumers more purchasing power. That's a significant tailwind for those consumer-focused sectors.
And other indicators looked okay, too.
Yeah, pretty solid. Interest rates were stable at 7.75% in July. Unemployment was low, 3.80% back in March. So you've got this backdrop of a stabilizing economy supporting the market.
So the overall market strength in this rotation makes sense. Did we see signs of confidence at the company level, too?
We did. Specific examples really highlight it, like Colombo Fort Land Building, ticker CFLB, was up 14.7%. Sources put that down to just better investor sentiment towards the company.
Okay.
And Carson Cumberbatch, CARS, gained 8.9%. That was partly linked to an upcoming dividend payment.
And it wasn't just stock price moves, right? There was other corporate activity.
Loads of it. The sources mention a whole flurry of dividend announcements, companies doing rights issues to raise capital, debenture issues too, and lots of interim financial results coming out.
That sounds like a busy, healthy market. Companies feeling confident enough to reward shareholders and raise funds.
Exactly. It signals transparency and, underlying optimism about growth prospects.
Okay, so let's tie this all together for our listeners. What's the main takeaway from this seemingly contradictory week?
Well, that week on the CSE, August 1st to 8th, it was really about strategic consolidation after hitting that huge 20,000 milestone. The flat performance wasn't bad news.
Right, it was the market catching its breath after a massive run-up. Healthy digestion, not a reversal.
Precisely. And the long-term view still looks pretty bullish. Analysts are forecasting strong earnings growth, something like 47% annually for the whole market.
Wow. And even for industrials, despite that weekly dip.
Yeah, an amazing 82% projected annual growth for industrials. So that dip looks more like a short-term reaction.
So for you listening, the key point is, don't just look at the main index number. That flat week hit a lot of important action.
Understanding that sectoral rotation, seeing how money moved, and connecting it to the improving economy like that negative inflation gives you a much richer picture.
It really does. It makes you think, doesn't it?
Definitely. It prompts a bigger question, perhaps. How often do these flat periods in a market actually signal significant shifts happening underneath?
Yeah, hidden opportunities maybe, especially when the underlying economy is getting stronger. Makes you wonder what other flat markets out there might actually be getting ready for their next move.
Something to keep an eye on.